On Monday, trading is going to unfold rather sluggishly as the macroeconomic calendar contains no crucial economic or political events. However, it does not mean that there is nothing to talk about. Market participants is buoyant. Plus, there were lots of important economic reports last week. Let's find out what to expect from markets this week. The US dollar index is holding steadily at 94.10 on Monday morning. Now, investors are assessing the prospects for a possible tightening of monetary policy by the Fed. So, the US dollar index is likely to trade in a narrow range for some time between the levels of 94 and 94.30. In September, the regulator hinted at an increase in the key rate in the following year. What's more, Jerome Powell said that the central bank could begin the tapering of bond purchases this year and complete it by about the middle of the following year. At the same time, the US dollar rose significantly against the yen. It gained more than 80 pips, reaching the target level of 112.70. This morning, the pair keeps growing amid robust growth in the stock market. The Nikkei added 1.61%, whereas the China A50 increased by 1.51%. Apart from that, Eurogrande is facing an interest payment deadline today. Investors are hoping that the company will not miss another payment deadline. This uncertainty weighs on the yen. Analysts believe that the pair is likely to grow to 113. After that, it may perform a reversal as it has entered the overbought zone. The Australian dollar was unable to develop a strong upward movement compared to European currencies and the Canadian dollar. This morning, it's trying to catch up. On the chart, the price has already broken through the resistance level approaching point 73.40. Yet, its further trajectory still depends on the greenback's movements. The US Treasury yields continue to grow, which may limit the growth of counter-currencies. This is why the pair is unlikely to reach the target level of 0.7445 in the near future. Today, it may enter the range between 0.7340 and 0.7390, where it will remain for several days. To sum up, traders are expecting the tightening of monetary policy by the Fed. They assume that annual inflation remained at an elevated level of 5.3% by the end of September. The Fed's meeting minutes for September will be published soon, which may give additional clues about the regulator's future moves. Until then, trading activity is likely to remain calm. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.